All right, today we're cracking open a brand new report from HSBC. They talked to over 10,000 wealthy investors from all around the globe, and frankly, what they found is pretty fascinating. We're going to look at what they're worried about, where they're moving their money, and what all of that might just tell us about the future of wealth. Let's dive in.
So, what's actually keeping these folks up at night? I mean, what are the big worries that are pushing them to make these huge financial moves? You'd probably think their concerns are on a whole different planet from ours, right? Well, you might be surprised. Turns out, there's a lot of common ground.
And when I say a lot of common ground, I mean a lot. Check this out. A whopping 8 out of every 10 of these investors, they're all worried about the exact same things when it comes to their money and the economy. That is an incredible consensus.
Okay, so what are those big concerns? Let's get into it. First up, the investor's mindset. We're going to get inside their heads and see what's really driving the decisions.
And here's what's so interesting. These worries are probably going to sound super familiar. The number one concern, the rising cost of living. Yep, turns out inflation doesn't care how big your bank account is. Next on the list is the state of global affairs, all the geopolitical chaos we're seeing. And rounding out the top 3 are those big macroeconomic headaches, things like interest rates and whether a recession is looming. These are basically the 3 big anxieties driving everything else.
But, being worried is one thing. Doing something about it is another. And all this anxiety is pushing investors to make some really specific, concrete changes. Which brings us right to our next section, the Great Portfolio Pivot.
For what felt like forever, the smart money was supposedly on the sidelines, just hoarding cash. Well, those days are officially over. The new game plan is all about putting that cash to work. People are tired of waiting. They're jumping back in and actively hunting for growth.
And you can see that shift happening right here. It's a classic seesaw, isn't it? As the amount of cash they're holding goes down, you see the money pouring into other things, especially into what we call alternatives, and also into gold. They're basically trading in that safe but doing nothing cash for a much more active game plan.
And we're not talking about a small change here. The scale of this move is, it's huge. A nearly 40% drop in the cash they're holding. Think about that. This isn't just shuffling a few things around. It's a fundamental overhaul, a massive river of money flowing out of savings and into the market.
Okay, but here's where it gets a little complicated. Just when you think you see a clear trend, there's a twist. Even though they just made this giant move out of cash, about half of these investors say they're going to hit pause. They plan on keeping their cash levels exactly as they are for the next 12 months. So it kind of feels like the big scramble is over, and now everyone's just waiting to see what happens next.
Of course, not everyone is thinking the same way. If you slice the data by age, you get a really clear divide. It really is a tale of 2 generations. And the split is pretty stark. On one side, you have the younger generations. They're way more confident about hitting their financial targets, and they're the ones really leading the charge into those alternative investments we talked about. On the other side, you've got the older generations who are sticking to a more cautious, traditional playbook. It's this split in thinking and in action that's a really big deal right now.
So with all that in mind, where's the money headed next? Time to start looking beyond the horizon.
Wow. Okay, this chart tells a huge story. Just look at the plan for alternative investments in the next year. They're planning to double their holdings. That's not a small jump, that's a leap. We're talking about a tidal wave of money about to flow into things like private equity and hedge funds. It's a massive bet that these less traditional assets are the key to getting better returns and spreading out risk.
And this hunt for growth isn't just about finding new types of investments, it's about finding them in new places. A full 42% of these investors are actively looking for opportunities outside their home country. The message here is pretty clear. If you want to build a modern portfolio, you've got to think globally. Okay, last section. And this one might be the most surprising of all. Think about it. They're making all these complicated, globe-spanning decisions. So, where on earth are they getting their info? I bet the answer is not what you think.
Seriously, check this out. The top 2 places they go for information are social media platforms and their bank's own digital channels, like their apps. Isn't that wild? It's a huge sign of the times. Big money decisions are being shaped in the same places you scroll through every day. It feels like a major shift in trust, away from the old-school advisor and towards information that's fast, digital, and right at your fingertips.
But we've got to circle back to that generational divide one last time. Because while almost everyone is going digital, the baby boomers are kind of the exception to the rule. They still lean heavily on non-bank channels, sticking with more traditional sources. It really puts a spotlight on just how fast this digital shift is happening for everyone else.
So let's wrap this up. The world's wealthy are dealing with uncertainty by diversifying their assets and looking all over the globe for opportunities. They're making some pretty bold plays, and they're getting their intel from very modern digital sources. So that leaves us with one big question to chew on. Is what they're doing a warning sign that the old ways of investing are broken, or is it a roadmap that maybe the rest of us should be paying close attention to?